right, good morning, Squadron. Welcome to the morning brief on Tuesday, on Friday, September 25th, and I am glad it is Friday. I hope you are as well. Thank you so much for checking us out today. If you want to join us, Steve at ototnow.com. I'll get you in on a free trial. All right, the rest of this is the Fighter Pilot Brief in the morning. Welcome to a couple new names that I haven't seen in a little bit. So, Geach, good morning. All right, mission objectives this morning. We're going to grow our money, protect our money, and live off our money. In particular, today we're going to talk about protecting our money. So we've been down 3 weeks now, maybe today, depending on how today ends up, which, you know, it's Friday, which you tend to get big moves on Friday. And lately, not in September, but before September, it's been a big, up day, rip your face off Friday. And I think we are set up for that again. They're talking stimulus again. So we might see an update today. We shall see. But the whole month of September has kind of been one big sell-off. So we're going to talk about bond fund investing, which again, when you invest in bonds, you're not really looking to make money. You're looking to preserve money. So whether you have all of your stuff in bonds or a portion of it, or say you're below 40 and you just don't care because your hands are in the air and you're going to stay long no matter what, and you have no bonds, that's okay too. But when you want to go to protect capital, bonds are the way to go. So we'll talk about the different funds to do that. The question of the day is, why own individual bonds? So bond investing is like one area, and then a subset of that is individual bonds. So we'll talk to that a little bit about that. All right, our flow this morning, we're going to go long, short, open, short, long. What that means is we're going to talk about long-term investing first. We're going to go around the world. We're going to come back and talk about headlines here in the U.S. Then we will talk about the open and get set up for some day trading stuff. I will call it one trade or two. And so far, I see a bunch of stuff in the green. I don't have a short trade I like yet, but I'll talk to you about how to set that up if you want to either follow along, do it with a paper trade, or do it with real money. That's all up to you. But it's going to be here for us, so we'll watch the market open. We'll talk about how things are setting up for long-term investing as we transition back out to long-term stuff. I will talk about the question of the day, and then I will wish you well for the day. If you have any in the chat window, if you have any comments, I see already Debbie Gibson and Tiffany Albums in the comments. What? Wasn't me. All right. I like Tiffany better than Debbie Gibson. I kind of couldn't stand her. But anyway, we'll get back to your questions. So make sure if you have questions, put those in the Q&A block, and then I will cover the Q question of the day. For contingencies, or if you're having issues getting into the room, hit me up at steve@otot.now. My staff will help you out. And the standard disclaimer applies. This is an educational briefing, so I do not know your own personal financial situation, so you have to do your own due diligence before you act on anything you hear this morning. All right, let's take it up to the Think Pipes platform. Again, this is on the institutional side. If you're on the retail side, you would have the Think or Swim platform. Both are the best out there. Remember, one thing we haven't talked about in a while is you have Schwab out there and you have TD Ameritrade. I use both platforms and have clients with both, but they're going to merge. I don't think it's going to happen in 2020. So sometime in 2021, they will become one big TD Schwab trade or whatever they're calling it. But yeah, we'll see what platforms they keep. They've said they're going to keep Thinkorswim, which is by far a superior platform. So for the noon folks in the room, we're looking left to right 1 year of the S&P 500. That's right up here. You know, we had the big run up into February. The wheels came off, fastest drop in history. March 22nd, I said lock and load. 23rd was the actual bottom, and we made a ton of money in this move up. Now, we're in that reversion to the mean. You have all these up channels, which are nice. We've broken out the bottom of the up channel, however, and we're kind of seeing if we hold this 320 level. If you watch my video that went out earlier this week, I have called that the end of the year is lower than we are now. I don't have a crystal ball. Don't bet the house on that, but that's the way I think things are going to turn out with the uncertainty that's coming into the election. I think we will stabilize in a 300 to 320 range, but we shall see. We don't know. If we're doing smart things as politicians, not we as politicians, but the politicians of the U.S. and setting us up for success, a nice clean election, and Trump, if he gets outvoted, he gives up the throne kind of thing, peacefully. We'll transition if that's what's in the cards, and then hopefully the market can be set up for going back higher either way. When you look at the last 5 days, Here's where we were. This was Monday. We kind of hit this bottom 2 days up, and then we revisited at the end of the day on Wednesday. That's when I put the video out. Yesterday was kind of an up day and then sold off, and then we'll see where Friday goes. A lot of momentum. You got to like that going into the open. So for the day trading, if you're setting up your screens, start thinking longs. Start thinking there's several names out there that are up 5 to 10%, but we shall see. As far as the earnings calendar, nothing from today. Last night we had Costco. Costco beat earnings, but they only beat it by like 20 cents off a $3 earnings range. So they did not get that huge move up that I was counting on for us to have a big green Friday. So we shall see. And here's our day trading charts. We'll get back to that in a minute. All right, I'm going to share out to you now CNBC, and we will go around the world for our headlines. Starting with here in the U.S. and how the futures are doing. So a quick refresh there. All right, we were down 130 earlier. I saw 200 when I first got out of bed this morning. So we're trending in the right direction like we just showed you. NASDAQ's actually up. So again, NASDAQ being the tech heavy, Apple's up this morning. So Apple's been sold off pretty hard. Let's get back to the top here. And we shall see. Kind of as goes, Apple and Tesla tends to take the whole market these days. So we'll see. All right. Over in Europe, I did not look around the world. All right, red across the board, not necessarily significant. Kind of a big move in Germany there. All right, Japan's up, China off a little, Hong Kong off a little, Australia up big. Nothing really concerning. Here's our numbers from yesterday. You saw the big, it was up in the green, into the red, back into the green. So we shall see. VIX, I like the VXX trade, which is the index version of this. Volatility's up, and yeah, again, long vol. That's where I think we're going towards the election. All right, for bonds, didn't see any big movements there. Oil did crack the 40 range. So again, 40 to 60 is what we're looking for being healthy. And in the precious metals, not much movement there. Silver's been selling off pretty hard. It's down about over 15% from its highs. So I'm not interested in buying it yet. Now, if it did get below 20, it would get on my radar scope and I would take a look, but I really don't see it getting down that low. Okay, back to the headlines of the day. All right, probably the biggest one I think that will affect the markets is stimulus plan out of the House, 2.4 trillion direct payments. I looked at it, I saw a 600 number. I don't know if that's what the direct payment is or not, but that's a check showing up on your doorstep or in your bank account. We shall see. I think, like I said yesterday, political football. But both sides are probably going to try to look like a hero. It looks like, divorced parents fighting over a kid, if you will, for the analogy there of trying to look like the good person. So we'll see. We'll see. I do think there will be stimulus deal because of the election. So, all right. Let's see what else we have. I suppose I should care about this, but I don't really, because hydrogen power just to me has been a non-starter, both in vehicles and now in airplanes. But we'll see out there. Nikola is, again, hydrogen first, electric vehicle second. We've used hydrogen vehicles in the military for years, and it's a house of pain. So I don't see it coming out. Apple will have to pay off some big tax bill. That's an ongoing battle. That's really not a new headline. But they're going to end up owing a whole bunch, probably not 15 billion, but they will. That should not affect the stock. Okay, Apple's 20% pullback, great time to buy before the iPhone 12, which I can't wait for because my iPhone 10 is dying, which kind of makes me mad because usually they last till I get the upgrade. But we have Kramer's come out and said now's the time to buy Apple. Morgan Stanley coming out this morning. For most of us, I'm looking across the names. I don't see anybody who isn't loaded to the gills on Apple yet. Maybe one of you could look at picking up some more Apple for you here. But yeah, for the most part, I would wait a little bit more. See if it cracks 100. It's 108 right now. Pac-12 finally coming around to the, football's going on and we're not participating. That's very costly. If you ever look at the revenue models of these schools, football kind of carries the day. You know that I worked a UT game, what was that, 2 weekends ago? Maybe even 3, I can't remember. That's probably 2. As far as had 15,000 or had 18,000 tickets sold, 15,000 actually showed, something like that. Everything was fine. and you were out of the parking lot in actually half an hour instead of an hour and a half. So think it can be done. We shall see. College Station, what, Geach? Against Vanderbilt. Oh, my. What's the line? You know, is it A&M by 40? We shall see. 17. Well, that's not bad. Got called to work that game. I took a pass. I don't want to drive to College Station. No offense. All right. What else do we have? I haven't seen this. Massive bond market will be more accessible. I'm going to put that in the notes for me to read about here in a second, since we're talking bond investing. It's the China bond market. All right, because I only invest in an international bond fund, but if we get individual bonds from overseas, I would be interested in that. And we'll talk about that. Okay, that's our headlines for today. Let's flip over to bond investing. So, you know, to reiterate, and I didn't think this way for a long time. I thought, okay, if you went into bonds, you're actually trying to make money. Well, bonds track interest rates, right? So, and interest rates being at zero means bonds don't pay a whole lot. So if you've been with me for, you know, almost a decade now, you know I've been pushing individual bonds for a long time, and it hasn't been the most popular thing when the market's screaming higher and they're like, dude, why are you putting me into 5% bonds? I'm like, oh, well, for days like today when we won't see a 5% bond for another couple years. So companies issue bonds with whatever the kind of the going rate is, and sometimes they issue them out for 30 plus years. So if you have individual bonds, you're kind of slapping high fives, or maybe you haven't noticed. I, a money manager, am slapping high fives, so we have those in the portfolio because they're actually making some money. If I were to go out and buy an Apple bond today, since we just talked about Apple, Apple's paying like 0.8% on their 5-year bond. No, and you're right, that is not worth getting out of bed in the morning. Literally, don't do it. You just go to your high yield savings and get your 0.8%. So that is kind of where we're at with the super, triple A rated bonds out there of these bulletproof companies. Now you can get off into the sketch zone and make 5%, but we don't hang out there. That's not what we're going to do. So your investment grade stuff is now, I used to say for years, I've said, hey, let's set you up in a portfolio of 4.5 to 5.5% investment grade bonds. Dial that down. Now it's 3 to 4%. And most of the times it's why bother? Let's go buy a dividend growth investing stock for 5%. But when you think, so don't think of bonds as making money. Think of it as protecting your money. And you should. If you've already made, I've had discussion with a couple of you in here. If you've made your number that gets you to the rest of your life, congrats, high fives, protect a portion of your portfolio, even if you don't want to, right? It's just a smart thing to do. When we do the smart things around here. All right, one thing I wanted to show you, one way, if you were to pull money out of the market and go to cash, or when I say, hey, I'm going to bring out hit 100K or 400K to cash, I'm putting it in G-bill. Now, G-bill is treasuries. So when you think of, issued by the U.S. government, you can go to treasury.gov and buy it on your own, or go into your brokerage account and buy G-bill. Don't let money sit in cash. You make nothing on cash. So go into G-bill and at least get some revenue there. So dividend, 1.8%. All right. Yeah, that's better than your high yield savings. So, and when people are saying, hey, I've got 50K on the sidelines, I just want to hold it in the bank. I'm like, okay, well, your bank's paying you nothing. You can pay me and I will get you 1.8%. I don't know. If they're good at math, they'll take me up on that deal. All right. So this is what treasuries look like when the market sells off. And this is why protecting your money. Now, this looks like a huge chart. When you look at this, look over here to the side. This is 100, and that's like 70 cents higher. Less than 1% this moved. So even though it's an eye catcher, like, oh man, this thing ripped higher. No, it didn't. It went higher. And then it's off 30, 40 cents off of its highs. This is how you protect your money. If you notice, there's a dividend payment every month when it drops a little bit. So think of it like your bank account. It accrues daily, pays monthly. So what does that mean? If you hop into G-bill with 400K, hold it for a week and leave, that means just like your bank account, put money in, you accrue it daily. So you can put 400K in, take the money, 400K back out and go buy some Apple. And you're going to get paid a few weeks later for those 7 days that you had your money sitting there. So it operates exactly like a high yield savings, which is why I like bringing it up. Okay, so that's my favorite, if you will, for parking cash. Now, if we're going to try to put some money there long-term to buffer your portfolio, take a look at some names over here. G-bill in the upper left is what we've been talking about. If you want to use a different version that's a little more managed, G-bill is short-term treasuries. So think of that 1 year out to 3 year. SPTL is now an index fund of treasuries out to 30 plus years. The US government has talked about issuing treasuries out to 100 years. Well, we're thinking about that because interest rates are at like zero. So yeah, let's lock people into these long-term rates, which we're going to have for a while. But this is more of an active thing. So when you look at the down at, here's COVID in March, down to 40, up at 47. So this is moving. So one thing people can get excited about is if you go into a bond fund, they're like, Steve, it shouldn't ever go down, right? It's like, no, it can go down, up and down with the market for bonds a little bit. So you do see some movement. Here you see a pretty steady chart out of G-bill. So if a client's like, I don't want any movement to the downside, I'm like, well, I can get you almost any with G-bill. But if you do SPTL, now you're looking at that 2 to 3% because it has longer term stuff in there. If you want long bonds for investment grade long bonds that'll lock you in, SPLB is the way to go. Now that can get into some very long-term arrangements, which I don't necessarily care for. So I don't use it a whole lot. And if I did, it would only be to get a little bit more yield. That would be up in the 4%. So if you are living off your income, then I would put you in SPLB. If you're trying to protect your money, which you may recognize this ticker symbol for almost everybody, except for the youngest in the room, SPXB is where I'm parking your cash. SPXB is a subset now of investment grade bonds only from companies in the S&P 500. So like you're still getting the yield, but it's super safe. So that's why I like this fund. You see not a whole lot of motion in the ocean like that. You're making 3.8, I think was the last time I looked at the yield off of this thing. And yeah, it has sold off a little bit. No, I'm not worried about that. It is if, I bought it here, it's 96, you may be worried if we put a quarter million in there. I'm not worried. It'll rise back up. So just look at that long-term march up. Just got to be a little patient. And the other two, I don't know why they're not coming up, but they're Vanguard funds, BND. Obviously, Vanguard likes to make things very simple for the investor. So BND is just basic U.S. bond market. And BNDX is their international version. So when you think Vanguard, you're thinking the indexes of all indexes, right? They make no attempt to manage things like these other funds do. They just simply offer this to you, very small cost for that service, and you park money in there. So those are options as well if you kind of want the most passive that are out there. All right. Talked about Palantir yesterday. I just always like to see what Kramer's squawking about. He's fun to follow on Twitter. If I'm on Twitter now, have been for a couple of weeks. It's kind of a hoot. A lot of high school volleyball, high school football stuff local, so that's kind of neat. And I follow Elon Musk and Jim Cramer. They're both pretty good at putting some funny stuff out there as far as the markets. All right, let's go over to briefing.com. We're going to look for our up and down. How many followers do I have? Not very many. I don't know, less than 50. There should be more. I think that I put funny stuff out, but maybe I just put too many pictures of my kids out there. I'm a proud dad. Get over it. That's kind of how I use futures. So we shall futures. That's how I use Twitter. All right. Let's, sorry for the small print. Let's look around here for some long and short names. Long FLR, they beat earnings. So they're up 10%. Again, for a strategy for the new folks in the room, we're looking at 5 to 10% moving in either up or down direction and then going in that direction. It's a gap and go strategy. All right, if it's more than 10%, generally it's gone too far where we're not going to get that movement. All right, Novavax. Now, ENDP in an agreement with Novavax. That's a name we know. It's a pharma name, so they're plus 9%. So let's see, ALT. 7.4%. These are long names that I'm looking if you are following along. There's Invax plus 6% phase 3 trials. So I like that for going long. I have a feeling today is going to be a long day. That's a feel. It's not based on math, so don't get excited. All of us have feels, right? But I think this is going to be a good news Friday. We shall see. All right, the rest of these are not moving nearly enough. There's an upgrade on COTY. We'll pull that up. That's at 4%. All right, there's looking at the negatives. Costco down 2%. IGMS down 2%. Here's our downgrades. CPE minus 3%. So I'm not pulling anything off of the downside. Nothing there. Gapping up. We already talked about. Those are all of our names. We'll look at Camp as well since they're up at 11. We shall see. All right, anything catching my eye here? No. There are some other names, so we will take a look while I pull up FLR. I'm sorry, let's pull up Invax first. So again, we'll go through these. We're making sure we have at least 100,000 shares, or we're getting close to it, and then we're looking for that 5 to 10%. I'm also looking on my phone because I have some names I pulled up earlier. So let me take a look here. These are all long names. Caesar's up 10. So we'll look at that. That's CZR. So if you want to start setting things up, it looks like we're going to go 3 longs. So again, you can go long in an IRA. So consider. All right, there's Endo, Fluor, FLR, Shell. That's what I wanted. The Shell and which is Tortoise. That's an electric vehicle truck maker, up 7%. And Workhorse, you know that name, is up 7%. So those have sold off hard. So they're doing nothing more than filling the gap. All right, Novavax, I think that'll be my number 1, initiates pivotal study of the COVID-19 vaccine. And Diamond Peak, DPHC, plus 6%. And if you were listening in earlier, Joe Kiernan, that's who was talking about being a Reds fan. All of the cruise lines got upgraded. So CCL, and we'll see what other names show up. I don't know if they've gapped up or not on the issues. All right, Novavax, we have our 100,000 shares, 102 up to 106, so approximately that 6% we're looking for. Where is it on the chart? It closed here. It's going here. Does it have room to go higher? Yeah, it was up at 195, so let's take this long. That generally will be number 1. Going to need at least $1 stop, though, so big stop. All right, let's look at some other names. FLR. Fluor Corp, I don't know what they do. 100,000, 935 to 910. It looks like it's gapping down. What? Stocks on the move. We'll have to come back to that one. It doesn't look like it's reading correct. ENDP was up 10%. I don't know what Endo does. Lots of volume. 302 to 325. If you like I do like taking these low dollar figures. 302, 325. Yeah, it's got room to go higher, but I don't know exactly what the story is. So we'll put a question mark on that. May cycle back to it. ALT, Altimmune, pharma name, not enough volume. I do like the gap up, so we'll have to come back to that. That gets a volume note. COTY. It would have the volume. Lower price point. Look at how this thing's been crushed. So I've been cut in half in the past month or so. So what do we have here on headlines? Bounces off of record low as it upgrades to neutral. Ugh. So not much of an upgrade. Raises price target to 325. Okay, from 3.1. I don't know. Kind of interesting. So we'll take a look. Nice low price point. It's up 5%. We'll check back on that. CAMP. Not enough volume, so that's off the list. Caesar's up 10%. Now, this is earnings off of yesterday. It also follows the model of, like the cruise lines, and whoever said they think they're coming, they might be early, but it's going to be time to cycle into these names at some point. I'm not a big fan of being in the casinos. I do like DraftKings, LCA, that sort of thing, and this is an online gaming story or sports betting. I like the gap, not quite enough volume. Don't really like that it's kind of maxed out recently. So in a month and a half, it's almost doubled. So let's take a pass on Caesar. Took a Shell and Workhorse real quick. I'll show you the pain that, where is it? SHLL. Near-term pain all the way down from 58.43. No news associated with it. This is just a gapping back up. I do like that though. And Workhorse is probably going to look exactly the same. Yeah, a little more pronounced on Workhorse. So I do like the bounce in Workhorse. Probably bring that up as our third. And DPHC, I don't know what they do. Diamond Peak. I want to say it's a gambling thing. 21 to 28, it meets all the criteria. It probably is following a gambling thing, but don't need that. Let's look at a cruise line real quick. Carnival. Look at the volume. Bam, 1374 up to 1442. So math tells me that's heart of the envelope. We could take a look at that. We shall see. See if we can find it off to the right in the top 10 volume. 3 minutes to go. CCL, so 4.51. That they're pretty close to our criteria. I'll call it good enough. So let's put that as 2. So we'll do Novavax as our number 1. I like that the best. Dollar stop. And then CCL at 2. Workhorse at 3. Cody will come back to as 4 unless we find a short here to take a look at. All right, there's the NVAX. Checking our numbers. Almost the volume. That's good enough. Zoom. Well, not enough on the move up there. So Novax is in heart of the envelope. See if there's anything. Last look at the decliners. 30%. Yikes, not getting in the way of that. Costco not down enough. So nothing short today. There's our shell. We're talking about 7.5%. Trying to grab Workhorse off of here. Don't see Workhorse yet, so maybe we may cycle to. I like Workhorse better. I'm more familiar. All right, not seeing Workhorse there either. Oh, there's DraftKings up 4%. I like it. All right, let's switch over and get our charts set up. Excuse me. This is TD Ameritrade. Think pipes. All right, let's SPY we have here. We're going to go number 1. I like it the best, NVAX. And we're going to have to keep an eye on the market. Market's going to need to go long for these to get a lot of steam behind them. And then number 2, CCL. And then 3 is, I'm going to actually put Workhorse in the middle because I like it a little bit better. Workhorse. And then CCL over on the right. And then we'll talk stops. All right, if you have anything you want me to look at in the room, and now is your time to throw it in there. All right, let's talk stops here. We talked about this is 100, so it's going to be a dollar price point, 1027 to 108. So that's kind of the move there. Ideally, I'd want this to sell off a little bit and then go higher. I don't think we're going to see that. I think it gets bought right away. So we're going to probably hop into that pretty quick, which since it sold off so much, so we shall see. So that's $1 we're looking at for NVAX is 1 minute to go. So we'll get zoomed in here. That's my primary. Workhorse is secondary. 2316, 2019, probably 30 cents on the move up in that. And then in CCL, already moved up quite a bit. We can get away with probably a 20 or 25 cent stop. So, all right, 30 seconds to go. Welcome to the play of the day. We are looking at 4 screens up here. We have SPY, the overall market on the left. They're all on 1 minute charts. Our number, the rest 3 are long today. We're looking at Invax. It's a pharma name with a COVID-19 test. We're looking at Workhorse bouncing off of some recent sell-off, and then Carnival Cruise Lines off of an upgrade of all of the cruise liners out as we close in on getting ourselves a vaccine. So upgrade across the board. You could pick any of them. We've got. There's our opening bell. So we're looking at Novavax first. Again, $1 stop. I do like that it's selling off a little bit. So if it hits 108, a new high of the day, that's when we're going in with a 10 stop all the way down to 107. We'd actually set it below the low of the day. So we'll track it down here. So it'll be like $1.05. We are watching the overall market. We're not ready to really hop into anything. You can see it's red across all 3 longs. So we're going to get a better entry here on, on NVAX. All right, so we're going to enter at 107. And again, this is a long, 106.9. So it's going to hit long here, and we're going to have $1 stop. It goes 90 cents if you want to get fancy. Just gonna make a little mark to myself right here. We're not in it yet. That's just a little mark so I know where my entry is. As I'm looking off to the other charts, ooh, Workhorse just flipped. back long. All right, we're going to get this long here in backs. We'll call the entry, and then we'll see if we can get in that. So we're waiting for 107. Did it hit it? We'll wait there. 107, so get in the name. That's our long. We're going to take it. There we go. Got your arrow drawn for you. I'm getting much better at this. Make sure you're taking it long. Oh, man, look at the others screaming higher. Crap. That workhorse entry would have been nice. We're going to put our stop down here at 106, so it's all the way down at the bottom. And then we're looking at, what's beeping at me? All right. All right, Siri, not talking to you. No, thank you. All right, 108 is our first stop. That's a high of the day. What is Siri doing? And then it'll be 109 and the 110 we're looking at for our 3R point. All right. Can we take this long? We're just into the 5%, so it does have room to go higher. I would like to see it come down to 23.25 to go back long. Okay, we're taking it long, 23.25. We're going to have to put a 25-cent stop in. So we're almost right at that stop. Yee. Came down close to it. We may be busting out of there. We're busted out of it. So that's down an R there. Ooh, look at the, look like we're down and going to be hanging on to an INVAX too. We shall see. Stop it. There we go. All right, we're still in. So we busted out on an R down to the downside here on Workhorse and barely hanging. Just leave the stop in. If it hits it, it hits it. Siri, I don't need your help. I really don't. It's not going well, my friend. Silence. All right. So I do like the doji's down if it holds. I like that the market's going higher, so we'll just have to see. Be nice and patient. All right. Carnival been marching higher. We're not going to take another trade. We're down an R here. We're going to hold out for 3R here. Up there, we're out of that one. So off at 2R. So bad long trades on Friday. That's not good for the overall market either. See how the market's doing. Quarter off in the S&P 500. NASDAQ basically flat, and Dow's basically flat. So we'll leave those ugly red X's up there and take a look at some of our FLR, other long names. That was one flipped to a short. That was up 10% earlier. Now it's down 7. That's kind of crazy. ENDP. We were waiting on volume in ENDP. Not really working either for a long. Caesar was up 10%. So that's down to, it's only up 3% there. It's going to make me mad in Workhorse. It's going to make me happy as a stockholder because this thing's going to end up ripping higher. But it makes me mad that we got knocked out right there. That trade's going to go on to work. All right, let's see. Shell and Workhorse. We got Workhorse up. We'll look at Shell already. Shell has not flipped yet. If you were a junkie trader, you could get, which we're not taking another trade, but this is setting up for a long, so I would let it, I knew that would work right there. There's our 3Rs basically already up at the top, 23.75. Now that's 2Rs, 23.75. All right, Shell's kind of setting up. You could take it there, but let's not trade all day. And then DPHC was another name we're taking a look at. DPHC. And I'm just kind of hanging out in that 7 to 10% range. All right, let's check in on a few other popular names. Apple. See what Apple's doing. If I remember the ticker right, since I type it 1,000 times a day. Ooh, Apple in the red on the day. Not good for Apple. Longs. Let's see what Tesla's doing. Tesla's been in a house of pain all week since battery day on Tuesday. So Tesla was down to 380s yesterday. We feeling Luckin today. You know what? Geach, let's check on Luckin. What do you think? What's your gut tell you? I think it's up 5 cents. Hey, 7 cents. I didn't look. All right, where are we at though? So there's a lot of resistance in Luckin, and this is why I'm not worried about it at all. Not everybody's in this name. This is a Chinese coffee maker that got cracked for fraud, got fined this week. So that's why I'm on a 5-day chart here. No, I'm not on a 5. Yeah, I am on a 5-day chart. There, so this is Friday. So these are the previous 4 days, and then barely see into Friday there. I knew that workhorse trade would work. All right. So, so yeah, it's up a little bit. A lot of resistance at 3 though. So here it hit it yesterday and then basically kind of sold off right at 3. So I would imagine that we're going to hang out around 3. Once it breaks above 3, I think we'll see it sailing higher, if you will. If you remember, it was up at 328. This was the big move, right? It slept at around 250 to 260. It goes screaming through 3. So when I say there's resistance at 3 and then it screams higher, that's what you see. It cracks 3, and then what did it do? It went all the way up to 328. Do I care? Not at all. I'm holding out for the long run on Luckin. I would rather see it at 328 than 3. I'm human too, but I really don't care. It is a long-term play. I think it ended up back in the 20s. If you remember, it was back in the 40s a long time ago. So I think it'll be a steady move up. We shall see. All right. Good question. Huge. Yes. Never go full Trump. Talked about that yesterday. All right. Let's take a look at the long-term names. Get on the right chart here. Strike 2. All right. There we go. So looking around the world again, this is the S&P chart, 5 days, but we're looking off to the left. There's a DraftKings option. Looking at NKLA, we didn't look at that on the chart. We'll pull their chart up. They've had a lot of fun. They were off big yesterday. So, sorry, it was Wednesday. They were down big. So CEO resigned. Maybe it was over the weekend. I can't remember. It blurs together. So this is a name. Remember, it was a SPAC, Special Purpose Acquisition Company. Comes out and went to like 40 to 100, and now look where it is. It's almost down to where you can buy it if you believe it. I only have a little bit of it because somebody forced me to own it. I'm not really going to hop in right here. I'd rather be with Shell or Workhorse myself. All right, these are psychedelic names. There's Workhorse and Shell, like we're talking about. DraftKings up 3%. Tesla up 3%. NIO is, again, Chinese EV company. There's our Luckin trying to hang. All right, so a decent amount of number of stocks in the green. Let's look at our red. Not really any big moves in the red. Again, I think we're set up for a nice long Friday. I mean, really nothing was gapping down. We couldn't find a single short to look at. We're in the red across the board on the Dow, the NASDAQ, and SPY, but nothing's down big. Tencent Holdings, Baba, you're familiar with. Sony, again, PlayStation 5 coming out, huge Christmas number, so I'm a big fan of Sony. Put that on my buy list for when I start buying, which may not be anytime soon. I'm not buying a whole lot going into the election, so don't expect a whole lot of buying, except for putting in bonds, kind of waiting to see what happens. All right, so nothing really moving down big there. All right, let's get the long-term names back up. Go back to our trading. Stupid Workhorse. Yeah, it looks like Novavax was failing pretty much no matter what we did. So, all right, we'll leave Luckin up there. We'll get zoomed back into the 1-minute chart, and then I will talk some bonds. 299 down to, sold off while we're talking about it. All right, I'm on another screen. We're talking about the question of the day. Remember, last chance for questions. If you got a question out there, it could be about anything. Put that up in the Q&A, and I will get to it before we close out. Otherwise, I'm going to talk to the bonds and bond ladder. So specifically, make sure I got the question, why own individual bonds? So we talked about it a little bit through the day on why you want to own individual bonds. They're like stocks. You're going to diversify. So if all you can do is afford to buy one bond, I wouldn't bother, right? Because just buy a bond fund. But if you have, I would say probably 50,000 or so, or maybe you're super conservative and you're starting with 15 to 20,000, you might put a couple $1,000s into bonds. If you go into individual bonds, it is a contract. So literally think of a piece of paper is you are loaning your money to say Apple, because it's easy and we always talk about it. It's like, Steve, give Apple $5,000 and you're going to pay me 5%, and in 5 years you're going to give me your money back. Cool. And they sign, and it's like they buy it, and then that's the contract. They take your money, and then they pay you every 6 months. And then on your last payment, they pay you your last interest payment and they give you your entire principal back. Okay, that's how bonds work. Now you take that cash flow, and if you want to nerd out on this, if you think of the cash flow in and out diagrams, ouch, whose head just hurt from that? Remember drawing those up on your tests? So think of that and then overlay another one and another one and another one and another one, blah, 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 into a bond ladder. Now, when you ladder things out, you have different maturities. So that last payment where you get the last interest and then your money back, when you get your money back, you simply take that money and flow it to the bottom of the bond ladder. So when you think of bonds, as far as I'm trying to make that, stop it. Let me get out of this thing so it's not making noise. So when you think of bond ladders, then you want to stop, quit. There we go. You want to go out like 2 to 5 years. You don't want to go out 30 years. Just go out 2 to 5 years. And when something comes due, because every day a bond is in existence, it expires just like you and I, one day, right? It's one day closer to the eventual termination of the bond, right? So as it gets closer to maturing, it'll go to 100 because that's a par value. So if it's 105 now or 95 now, I don't care. That's an open market sales price. It goes to 100 and then you get your money back. And then you take that money and you put it to the bottom of the ladder. So people say, well, don't you want to play the interest rates? I'm like, well, you don't know if the interest rates are going to go up or down. So no, you're not trying to do that. You're kind of doing like a dollar cost averaging into bonds. So you just take whatever interest rates there, you go out 5 years, put a bond, and then that cycles through. So all these cash flow charts of money coming in and principal coming in, you overlay those, and then that's how you can live off your bond interest. So that's how you think, well, that's boring. I'm like, that's the point. Okay, when you're 70 or 80, you might want to be bored and not too excited. You can have a fun money account if you need to be excited. Okay, so this is the core of your money, not monkey. But when you think endowment funds, like Harvard Endowment Fund, that's what they're doing. That's why they're having trouble now, is because bonds aren't paying enough. So that's where they run out of money. But your firefighter funds, all your big pension funds, that's how they're using these bonds. You and I talk about $1,000 increments. They talk in $100,000 increments. So that's kind of, if you talk bonds in the big leagues and you say, hey, I got a bond for you, that's $100,000, not $1,000. So make sure you're talking the same game. All right, that's all I've got on bonds out there. Again, if you're in a bond ladder right now, we're not buying new bonds. So if something matures, I'm not going to buy some crappy 2-3% bond. We're going to go into either G-bill or look for a dividend growth name. Most likely wait till post-election for that. So your bond ladder, when bond interest rates are low, which we may see for 4, 10 years, we'll see, will just slowly expire over time, and I have to find something else to do with your money. So that's what you can expect. All right, guys, thanks for checking it out this morning. Let's see, what did I miss? Yes, hopefully you liked the little video intro. That's kind of my walk-up song. You're right. I hear you there. Yep, Tiffany, flowers on the wall, all about to die. I got you. Good luck, Geach, over at A&M tomorrow at 17 points. I sure see a lot bigger spread than that. So probably go to DraftKings, right, and put that bet down. Don't gamble anywhere else. All right, feeling lucky. Last check on Luckin, 5 cents up. So fingers crossed. All right, you guys have a good day. We will catch up with you on a Monday. Enjoy your week.